Good afternoon, everyone. My name's Sajjad. I'm with Hurdlr. Hurdlr is a mobile finance app for the on-demand economy. Many of you who are attending this webinar are actually users of the Hurdlr app. You use Hurdlr to manage your finances, your on-demand finances when it comes to hosting on Airbnb or potentially even rideshare finances. So Hurdlr is used to manage your finances so that you can get accurate tax estimations and transparency on your finances to know how much you really make. Joining us today is the Shared Economy CPA, Derek Davis. I'm actually very excited about this webinar because I've been paying attention to Derek and we've been talking for quite a while. I figured this season, since taxes are coming up, it would be the perfect time to get Derek on a webinar so that I can introduce him to you guys and he can impart some of his wisdom on us. So with that, Derek Davis.
Hey, Sajal, thanks for having me today.
Thank you.
So today we're going to be discussing tax strategies for Airbnb hosts. Naturally, if you guys have any questions, please feel free to ask them, and then at the end, I'd be more than happy to help answer any questions that I reasonably can. To give you guys a little bit of background about myself, I'm a CPA. I have been working in public accounting for 5 years before I quit and I started this sharing economy CPA. I spent 3 years in the tax department at Deloitte & Touche and then 2 years at PwC working in tax. And I quit at the end of 2014 because I saw the growing need for people in the sharing economy. And to me, what the sharing economy represents is it represents freedom of flexibility and freedom to be your own person and be able to have some sort of supplemental income when you want and work the way you want. I think it especially resonated with me while I was working in public accounting and they were just virtually sucking the soul out of me. So I was just so enthralled and just so interested in the sharing economy that I quit to start this company. So a little bit about the firm. We service primarily Airbnb hosts. I would say at least 85% of our clients are Airbnb hosts. The reason being is that Airbnb hosts generally are able to make more revenue, so there's higher need for a CPA. And additionally, with Airbnb, there comes its own set of tax consequences and tax rules that you should be aware of. Since we've launched at the end of 2014, we've had approximately 700 people contact us, and we have several Airbnb hosts that are grossing over $500,000. One of the exciting things that I was able to partake in was at the end of last year, I was able to speak on a panel on Capitol Hill regarding tax reform for sharing economy workers. So for those of you that do or do not know, a 1099 is a tax form that you will be issued. And it's issued to independent contractors, consultants, investors, and also to report investments. So one thing that's important to recognize for 2016 is that Airbnb will not be issuing everyone a 1099, which is different from last year. You will be issued a 1099 only if you made over $20,000 and had 200 transactions. But just because you don't get issued in a 1099 if you don't meet those thresholds, you still have to report all income. Not reporting your income is also known as tax evasion, and you can go to jail for that. So it's really important that you do report all income. Another important thing to note for this year is that the standard mileage rate was actually dropped to 54 cents. So what does that mean for Airbnb hosts? That means that if you drove to and from the store, say Bed Bath & Beyond, Target, maybe a supermarket to pick up either supplies, groceries, or things for your Airbnb, those miles are considered tax deductible. So the standard mileage rate is one of the 2 deductions that is available to you. Another thing to make note of for this year when you're filing your taxes is that it's really, really important to have health insurance. Last year, the penalty for not having health insurance was $95, and I believe this year it's well over $200. So you want to make sure that you have health insurance. In addition, the penalties for next year's tax return is going to skyrocket beyond $600, and it's going to stay at that level. So it's really, really important that you do have health insurance. So here is a sample 1099 tax form. So what's really important about this tax form is that one will be issued to you as well as to the IRS. So for example, if you've been an Airbnb host for a few years now and you were issued a 1099 in the past, but you did not report your income, and you have not received a letter from the IRS, it's really important that you file an amended return and get that income reported on your tax return and filed with the government, because you will be issued a letter. What happens is the 1099 will be sent to you as well as to the IRS. So the IRS has written record that you did make a certain amount of money. So the biggest question that we get is, where do you put your income and expenses? And I will cover that in later slides, but for this slide in particular, it's important for your Airbnb property to put your income and expenses on a Schedule C. So this is a sample form of your Schedule C, and it's important to deduct things that are relevant and applicable to you. So oftentimes what's overlooked is the commission fee that's being charged by Airbnb. You want to make sure that you do deduct those amounts. And if you are preparing your income tax return yourself and you're trying to figure out, okay, where do I put my expenses on this tax form? There's an additional section on the bottom of the Schedule C where you can add additional expenses, such as your cell phone, such as supplies. The key when you're filing your income tax return is to make sure that you know whether you can expense it, so whether you just deduct it on this year's tax return or whether you have to depreciate it. The general rule of thumb for depreciation is the useful life of the whatever you purchased has to extend more than a year. So an example of that is generally a refrigerator. So if you had a guest house that you refurnished for your Airbnb, and you purchased a new refrigerator, and say you bought the best refrigerator at the store and it was $5,000, generally you would want to depreciate, and depreciate means deducting that amount over the 10-year period. So what happens from the Schedule C is that it will then flow in to your self-employment tax. And for those of you who are 1099 contractors outside of Airbnb and you have other sources of 1099 income, it's really important that you understand that you will be exposed to 2 layers of tax. The first is self-employment tax, which is 15.3%, which goes on here, and the second tax is simply your ordinary income tax. So Schedule C or Schedule E is a big, big issue for a lot of Airbnb hosts. And what we see is a 7-test determination of material participation, which is what the IRS uses. And Sajjad will be emailing out this slide deck. So after this presentation, feel free to just read through these in more detail. But the main thing to note that we've seen with Airbnb hosts is that it's generally Schedule C activity. Last year, we had several Airbnb hosts who were putting their 1099s on a Schedule E, and they were receiving IRS letters. So as a firm, we generally put it on a Schedule C to be more conservative. And why that's more conservative is because you're paying self-employment tax. And until the IRS comes out and has strict guidelines on where it falls under, we generally do Schedule C because it's more conservative and we don't want our clients to get audited. So when doing live webinars like this, I usually suggest a Schedule C. Where Schedule E can sometimes fall under is if you have some sort of management host company that provides all the services on your behalf. They let the guests in, they do all the cleaning, and they generally do all maintenance and all work on your behalf, and then all you do is kick back and you collect the revenue. But again, if you do put it on a Schedule E, simply be prepared to defend why you put it on a Schedule C if you do receive an IRS letter. Lots of times what will happen is if you put your income and expenses on a Schedule E, but you have a lot of expenses, for example, cell phone, driving to the store, supplies, groceries, etc., what the IRS can then say is, hey, you are saying that this is a passive activity. However, you have all these expenses that look like it's an active activity. So you got to really make sure that if you do put it on Schedule E, you're able to support your position, and you're able to go through the 7 tests to determine material participation and defend yourself. So just as a broad overview, Schedule C has self-employment tax, but you can potentially net losses against one another. So what do I mean by that is that if you first start up your Airbnb and you have a lot of losses, but you also have a W-2 income, you could potentially net some of those losses against your W-2 and potentially get some withholdings back. Again, it's important to note that if you have more than 3 years of consecutive Schedule C losses, what the IRS will then say is that you're operating as a hobby and not as a business. And then to reiterate, on Schedule E, there is no self-employment tax, but there are special loss limitations. So it's really important that you do understand, if you do put your income expenses on Schedule E, that you are aware of the net losses. So we oftentimes get lots and lots of questions on what's the best way to reduce your taxes, and the best thing that you can do as a 1099 contractor is keep track of your business expenses. So use apps such as Hurdlr to help you reduce the amount of tax that you owe. So I have these 2 scenarios, and if you look in scenario 2, specifically on the personal income tax of $318 right here, what happens is because you get pushed in a lower tax bracket, your personal income tax gets dropped a lot lower. And please note that this scenario is for a single individual who has no dependents and does not own their property. This is simply an overview of someone with no kids and no dependents, but they're single filer. So as you can see in both scenario 1 and 2, the amount of taxes in scenario 1 that you have to pay if you don't keep track of any of your expenses and you don't have any deductions is approximately $7,800, whereas in scenario 2, you're really thorough with your expenses. You stay up to date with your apps such as Hurdlr, and the amount of taxes you owe is approximately $1,700. So it's huge difference if you do keep track of your expenses. So what exactly are business expenses? So this is language directly from the tax code, and business expenses are expenses that are costs incurred in your trade or business. And the key operative word here is that the business is used to make a profit. So you can't just have Schedule C losses. So you get a bigger refund back if you have W-2 withholdings. If you do that over a consecutive period of time, you could get audited and it will not be very pretty. So what can you deduct? So the IRS hasn't specifically said, okay, as an Airbnb host, you can deduct X, Y, and Z. What they'll say is, to be deductible, the expense needs to be both ordinary, and ordinary means one that's common to Airbnb host and one that's necessary, so one that you had to incur. So things that you have to incur for Airbnb hosts is cleaning. You need to have a clean bed. You can't run an Airbnb and have a filthy bed when new guests come. So that's definitely an ordinary one, because all Airbnb hosts should theoretically be paying to clean the place after a guest stays, and one that's necessary. So just some quick examples of business expenses for Airbnb hosts. You have food and beverages for guests. You have supplies, laptops, cell phone uses, car, the standard mileage deduction, which please take note that for 2016 it's actually reduced to 54 cents per mile. And the key for being able to deduct rent, if you are deducting rent, is that the IRS and tax court rulings have said that it needs to be regularly and exclusively used for Airbnb. So for example, if you have a 2-bedroom apartment, you rent out the extra bedroom, but you also use it personally and you use it on Airbnb, what the tax courts have said is that to be able to deduct that square footage of the rent, it has to be exclusively used. And then other costs directly related to your business, the commission fees and any other fees that are being charged by Airbnb. So with that, I can now open up for any Q&A. My email is derek@sharedeconomycpa.com. Please feel free to email me. And if you want to check out our blog, we have tons of great resources. Our website is sharedeconomycpa.com.
Thanks, Derek. We actually have a lot of questions that came in, so I'm just going to go through them and see if we can get some answers for our users here. So, what would you say the overall verdict is if we were to ask your firm or any CPA for that matter? Should we always go with Schedule C or Schedule E, or is there a specific instance where you would want to use Schedule E over Schedule C?
Yeah, that's a really good question, and it's really fact dependent. So do you use a management company? Do you do it yourself? What is the structure of it? You got to first look at specifically the Airbnb property, and then you want to take also a holistic approach. So what else is going on in your tax return, and what is the best way to effectively reduce your your total taxes due while operating within the law. But unfortunately, as of today at least, the IRS hasn't been clear on what forms to use, and this could naturally change, in the coming months. But what I personally think is that as the sharing economy industry continues to develop and mature, we'll start seeing more robust rules and regulations around this area. But right now, it's still the Wild West, metaphorically speaking.
Gotcha. So would you say to stay safe and to maximize your income, you should just use the Schedule C as a default?
That's generally what we do to be conservative, because again, with the Schedule C filing, you're paying self-employment tax, but also we've seen a lot of notices from Airbnb hosts who are putting it on Schedule E and we're receiving IRS letters.
Gotcha. Gotcha. We actually have one user who has an interesting question. Scott from Philadelphia wanted to know. He actually has been contacted by the PA Department of Revenue saying that his occupancy taxes are past due. His assumption was that, or his thought was that Airbnb collects and remits those taxes. Do you have any idea on that, or is this something that Airbnb does, or do they do it on a state-to-state basis?
Yeah, that's actually a really big coincidence because I just got off the phone with a potential client earlier today. He's also located in Philadelphia, and they are stating that he owes 7% of his gross income to taxes, and he has a few years of back taxes. So we haven't done any calculations yet, but apparently Philadelphia is cracking down on Airbnb hosts.
Gotcha. What is the income threshold for when you actually have to report 1099 income to the IRS? Say you made less than $600 in a year, like you were a super casual Airbnb host. Would you have to report that?
So you always have to report all income. The kicker for Airbnb hosts is that if it's rented for less than 15 days, then you don't have to report it. But generally speaking, you need to report all income to the government.
Gotcha. Um, is there for the Airbnb 1099, just to be 100% clear on this, we do know that Airbnb does not issue 1099s for everyone. Um, to get this on the webinar again, who will receive a 1099 for Airbnb? What's the income threshold?
So for this year, it's 200 transactions and over $20,000 in revenue.
Gotcha. Now, if you were to receive under $20,000 in revenue, what would you use to report your 1099 income? Is it just going to be the standard way of reporting income in your 1040?
Yeah, yeah. So it would still be on your Schedule C, and that would flow into your 1040.
Got it. Yeah, so we actually had a lot of hosts ask us this specific question even before the webinar. I was getting emails from individuals who were joining, asking, I make less than $20,000 a year. I don't expect to receive, from what I've heard, I don't expect to receive a 1099 from Airbnb. What do I actually do in terms of reporting? So that answers it
Yes.
clearly for
Oh, yeah. Always report your income. Not doing so is is a yeah, that's tax evasion.
Mhm. So one of our users wanted to know, she uses a formula to kind of split up how much of her items she can deduct. So, for example, if she has a cell phone that she uses, she'll deduct the percentage that she uses for business. Do you do that? Do you do the same thing when it comes to uh, guests? Is it can you estimate, or do you actually have to? You can only deduct the exact actual number of nights that guests stay at your place.
Right. So the clear and better your record keeping is and your accounting, the better that you are in in the unlikely event that you do get audited. So if you do, so what has unfortunately happened in past instances is last tax season I had a potential client come to me, and he was an Airbnb host. He was Airbnb out of New York, and he made approximately $70,000, and he did not report. He did not keep track of any of his expenses. So if he just starts putting down expenses on his Schedule C and he gets audited, and he has no documentation to back it up, then he's pretty much you know he's pretty much out of luck, because without proper documentation, the IRS can disallow those business expenses, and what will happen is then the amount of tax that you owe will go up, and you'll have to pay penalties and interest.
Gotcha. Yep. So when it comes down to this, there's no guesstimating. If you don't really have any proof of your expense, you're most likely better off not reporting that exact expense because you can get into a lot more trouble for reporting something
Yeah,
you don't have proof
yeah.
of.
I mean, I think so. Like guesstimation can work if you were saying like I guesstimated that based on my receipts, I went to and from the store 10 times. The store is 20 miles away, so therefore I have 200 miles. That is possible, but again, it has to be reasonable. If you're making these outlandish guesstimated expenses that can't be supported, then if you do get audited, you're gonna be out of luck.
Gotcha. How would you do that guesstimation when it comes to cell phone, internet, Netflix, and all those subscription based things that you use in your house, but that is also shared by your guests? So, cell phone, for example, you use a certain percentage of your cell phone for Airbnb purposes. You also do that with your internet, and then also with your Netflix account or accounts.
Yeah, definitely. So I think it just really comes down to like being reasonable. So, and it comes down to the individual, and how do you support yourself? So, you can look at cell phone usage as a way to have a metric, but obviously it's very hard to determine, and also very meticulous to determine. But I guess just be very reasonable when estimating it. If you're going to say 100% of your cell phone bills related to Airbnb, you have to be able to support that. But again, if you say, my cell phone bill I used about 10% of the time for Airbnb, that may be more reasonable. And it'll also, another thing that you'll want to look at too is, what did your bookings look like, right? So if you have, one booking a month, then it's going to be harder to say that you were using your cell phone half the time. So oftentimes what will happen is the revenue or the bookings will be reflective of how much you're using your phone.
Gotcha. For some of our more complex users, if they actually um, use their Airbnb and they've set up some type of corporation like an S corp to manage their Airbnb business, but they've also ran into situations where they've used portions of the revenue that they earned in there for personal expenses. Is there any special way that they would need to manage that or declare their income and revenue?
Yeah, so if there's any personal expenses that are being charged to like say a corporate account, just make sure that you don't deduct those.
Got it. Looks like that's all the time we have for today. I want to thank Derek for joining us last minute for this webinar. If you have any questions for him, you can email him, Derek at thesharedeconomycpa.com, And if you wanted him to do your taxes, you could always reach out there as well. If you have any questions for me or want to learn more about Hurdlr, you can check out Hurdlr at hurdlr.com. And if you wanted to email me, I'm available at sajad@hurdlr.com. Check out more of our webinars at hurdlr.com/blog/webinar and look forward to a recording of this webinar in the coming days. Thank you for joining us, and we hope you all have a great evening.